Reputable versus non-reputable investments. What every NRI must know before putting money in India. In this section, we will clearly understand how the classification of your investments under FEMA directly impacts taxation, compliance, and most importantly, your ability to repatriate funds. What does reputable actually mean? Reputable investments refer to situations where both your principal and returns can be freely transferred abroad without restriction. In contrast, non-reputable investments are those where funds remain within India with limited outward remittance allowed under RBI regulations. This distinction is fundamental because it determines liquidity, compliance obligations, and exit flexibility. Types of reputable versus non-reputable investments. Under reputable investments, the following are included: NRI accounts, both savings and fixed deposits, FCNR deposits, mutual funds invested through NRI accounts, equity investments through the PIS route, government securities funded via NRE. Under non-reputable investments, we have income held in NRO accounts, mutual funds via NRO, rental income earned in India, property purchased using NRO funds, dividends and pension income. This classification is not optional, it is defined and enforced under FEMA. The account gateway, where it all begins. Your investment structure begins with selecting the correct account type. Let's examine the three primary options. NRE account: interest, tax-free in India, repatriation, fully reputable. Source of funds: foreign income only. NRO account: interest, taxable, typically at 30% TDS plus surcharge. Repatriation: limited to $1 million per financial year. Source: income earned within India. FCNR deposit: interest tax-free, repatriation fully reputable, source foreign currency fixed deposits. Selecting the wrong account at this stage can impact your entire investment life cycle. Tax implications you can't ignore. Let's review the taxation and repatriation rules. NRE fixed deposits tax-free in India with no repatriation limits. NRO fixed deposits subject to 30% TDS plus surcharge. Repatriation capped at $1 million per year. FCNR deposits tax-free with unrestricted repatriation. Equity via NRE PIS. TDS applicable on capital gains, fully reputable. Equity via NRO, TDS on both gains and dividends. Repatriation subject to $1 million annual limit. Common compliance mistakes. Several recurring errors expose NRIs to penalties. Using NRO funds while expecting full repatriation. NRO accounts are subject to $1 million cap and strict documentation. Purchasing property through NRO funds and attempting full repatriation. Only properties funded through NRE, FCNR or direct foreign remittance qualify. Failing to submit Form 145 or 146 during outward remittance. These forms are mandatory for tax compliance. Continuing to operate a resident savings account after becoming an NRI. If FEMA mandates conversion to NRE or NRO accounts. Which route is right for you? Your account selection should align with your income source and objectives. If your income originates abroad, NRE or FCNR accounts are ideal, fully reputable and tax efficient. If your income is generated in India, NRO accounts are required with careful tracking of $1 million cap. If you require currency protection, FCNR deposits eliminate INR exposure. If you're investing in equities, NRE PIS for reputable investments, NRO for non-reputable investments. The right structure depends on both income flow and investment intent. Key RBI rules to keep in mind. The following regulatory limits must be noted. NRIs are not permitted to invest in PPF or small savings schemes. Individual NRI equity holding is capped at 5% of paid up capital. Aggregate NRI holding is capped at 10%, extendable to 24% with board approval. Agricultural land, plantation property and farmhouses are prohibited investments. All transactions fall under FEMA 1999. Violations attract penalties under Section 13. These are enforceable rules, not advisory guidelines. To summarize, NRE and FCNR accounts: foreign income fully reputable, tax-free. NRO accounts: India earned income, $1 million repatriation cap, taxable. Compliance is critical. Convert accounts, file required forms, maintain documentation. Structuring matters. Incorrect setup can lead to penalties under FEMA Section 13. If you are unsure whether your current structure is compliant, it is important to address it early. An incorrect account setup can lead to blocked funds, penalties and long-term compliance. FEMA Advisors has been structuring NRI investments for many people. You may book a consultation or connect via FEMA Consultant or FEMABuy.com.